3-1 declining to advancing stocks. We're running out of a little steam, David, but it's been an extraordinary run in the last 10 or 11 sessions. Let's take a look at the sectors that are moving, and you see consumer staples. When they're leading, defensive has not been a big mover in this rally that we've seen, and when they're down the least, that's a sign of the defensive nature of it. Semi's a little weak, banks not doing anything. Energy with oil in its first down day in a while here, $51, but that's had quite a run as well. If you take a look at what we've been doing here, I want to remind everyone, we've been up 9 out of 11 days. Best start for many, many years. Volume is trending lighter as we get further into January. It was huge at the end of December. Volatility, the VIX down 44% since Christmas Eve. We're 20. We were 37 back on Christmas Eve. Best start to the year since 2010. So it's no surprise. Maybe we're starting to consolidate a little bit at this point here. We've had some amazing market leadership. The energy stocks, which were written off, everybody wrote off all of 2019 earnings, slashed their estimates, and now the market's come back dramatically here. Airlines also are up, and retail is up nicely since Christmas Eve bottom. And this includes the declines we saw yesterday in airlines and retail. I keep pointing out it was not a good day yesterday, but overall the market's really come back in a very big way. The bad news is the shutdown is starting to get a lot of people nervous on Wall Street. There is an awful lot of notes in the last 24 hours from analysts in their sectors saying this could happen here if this continues for another week or two. Cowen's had several of them out here talking about, this one's about airlines and the impact on government movement. The government shutdown will impact the industry's corporate travel business the longer it lasts. We believe government contractors are not traveling during this shutdown, and the longer it goes on, the greater the impact. Here they're talking about airlines and the impact on American, for example. They're very big in Washington, but there's a lot of other notes out. Cowen had a long note talking about the delayed paychecks, the delayed tax rebates, the delayed SNAP benefits, the supplemental nutritional assistance programs, food stamps, essentially. There's a lot more on this. TraderTalk.cnbc.com. I highlight some of the analyst commentary on specific sectors. But the bottom line is it's getting a little louder on Wall Street. One other sign, though, I think of optimism, and Sarah was talking about optimism on the trade talks. Remember, we kept saying no junk bond deals since November? There hasn't been any. Finally, there is one overnight. Targa, which is a midstream oil and gas company, they priced $1.5 billion at 6.5%. And a lot of people were saying, wait, if this market reopens, everyone's going to pay substantially more. I don't think 6.5% was substantially more. I think a little bit of a sigh of relief. And maybe, guys, we can get a little more normal junk bond market. We haven't had, this is the first one since November, longest delay in many, many years.